Capital taxes, inheritance tax and capital gains tax, yield very little in the way of money compared to other taxes, but quite a lot in the way of conversations, anxiety, and even anger. You may have experienced that in those conversations with your clients or other professional connections. HMRC have just issued some new facts on capital gains tax, which may be indicative in relation to potential change to capital gains tax, might help us with thinking about whether those changes might take place or not, and could be useful to you to use appropriately in conversations with professional connections and clients. Just knowing your stuff, knowing those facts, helps to enhance professionalism. Sorry if that sounds a little patronizing. So, to the facts, what are they? Well, they're basically just giving us an idea, or in fact a very clear idea, of the amount of capital gains tax that is payable. In 2019-2020, said he, referring to those facts, in the bulletin that we published recently, 265,000 taxpayers, 265,000 taxpayers paid CGT of just under £10 billion, 9.9 billion to be precise. The liability represents an increase of 3% over last year. But interestingly, I find it interesting, that 265,000 taxpayers represents less than 0.0005%, that's quite small, of the UK population. 28% of the taxes is another interesting fact, I think, in helping us to think about whether change might occur, and if so, to what part of capital gains tax. 28% of the tax came from disposals that qualified for entrepreneurs relief, now known as business assets disposal relief. So those two things in place, and the other fact, of course, is that the Office of Tax Simplification have been asked by Rishi Sunak to have a look at capital gains tax with a view to potential reform, and they have made their recommendations. Those facts are all in the mix in deciding, or for the government to decide whether to make tax change or not. What else would impact on that decision making? Well, if it's about getting money in from capital gains tax, then it's not what else, it's about what I've been talking about. CGT yields very little. So even if, as the OTS recommended as one of their recommendations, CGT was raised at the same level as income tax, so capital gains were taxed as income. And even if you had, superficially speaking, a doubling of the rate of capital gains tax, because we have such a low base, it would generate, say, another £10 billion. That's a really superficial view, but just say 10 billion, not going to, ignore it or dismiss it, but it's not huge compared to the size of government debt if getting money in. What other factors might be determinants for the government in deciding should we change CGT or not? Well, would it upset that many people? How would it play politically? 256,000 people upset at a harshening of CGT might be seen as a risk worth taking, a hit worth taking. What else could be relevant? Will it harm the economy? Well, anything that takes money out of the economy sort of harms it, but not dramatically, I think, given the amounts involved. So that's another factor. So capital gains tax is definitely something that will be on the radar, and will definitely be something that your clients will be talking about in the lead up to the next budget. We'll be asking you questions about in the lead up to the next budget, whenever the next budget is, this coming autumn or next spring. So whenever it is, we will be doing our best to keep you up to date with the facts to help you give your clients the information that they require.